it's top of mind for the lenders at this point. So you might be asking yourself, well, why talk about financial issues? Why get into and speak in any significant depth on this subject if it's a lender issue? And I think you'll see that there are some significant implications for your business as well. But I also read a statistic the other day that said that 73% of consumers still receive primary information about financing from their realtor. And so very much realtors are on the front lines of needing to be able to disseminate information, understand information, and be able to tell the consumer whether or not these new processes are normal, and whether or not they are, it is what they should expect. So I want to talk about, before we go through the forms, 7 areas of impact that we think these new forms will have. And I don't know if you all have had a chance to look over the forms, or perhaps you are looking over them as we're talking now. But I would just say at the outset, I really like the forms. I think that they are a much simpler form, and I think that, in fact, they will lead to greater understanding from the consumer's perspective of the real estate transaction. The old forms had some issues with them, and I think these are very consumer-friendly forms. But there are some other issues that go along with the forms, and that's what I want to spend a little bit of time talking about now. So these 7 areas I want to focus on here. So one is the scope of the new rule and the new disclosures. So at the moment, it applies to most consumer mortgages. 99.9% of what your clients are going to be dealing with, closed-end residential mortgages, this has application to. And initially, it will not apply to lines of credit, and it will not apply to reverse mortgages or mobile home financing. Rules that are slightly different, or another set of disclosures in the future, may apply to those specific areas of finance. But at the moment, it's going to pretty much be everything that we deal with on a daily basis. The loan estimate is going to replace the good faith estimate and the early truth in lending disclosure, so consumers will no longer get 2 forms, they will get 1. And lenders may rely on brokers, and I don't mean real estate brokers, I mean mortgage brokers or third parties who are acting on their behalf to deliver the document, but the lender retains responsibility for the accuracy. And I want to pause there for just a second and focus in on that piece of lender responsibility, because a lot of the behavior that the rulemakings is driving is based on the fact that lenders are responsible for the actions of the third parties that they employ or engage in closing mortgages or writing mortgages. And so you can see the disincentive to a bank like a Bank of America if regulations are coming down the line which make them responsible for the actions of third parties for which they have little or no oversight. You can begin to see the disincentive to do anything other than provide direct sources of lending. And you can begin to see a theme of what I'm going to call compliance partnership that is going to be very important in the future. So there isn't a great deal of change to how this form is to be delivered. It still has to be to consumers within 3 business days after they submit an application. But if you look that form over and compare it to a current GFE until, I think that you will agree that it's a much more consumer-friendly form that really does communicate information in a better way. The new closing disclosure form, the new HUD, we'll call it, replaces the current HUD 1, and it also replaces the revised truth in lending disclosure. So when we talk about integrated disclosures, that's what we mean. We literally are taking, or the CFPB is taking disclosures that were separate prior to and integrating them into single form. So the GFE and the TIL are integrated into an initial disclosure, and the HUD statement and the truth in lending disclosure, the final one, are integrated into a single form. And while initially that may not sound like a big deal, consider the implications, and we will, of the idea that the HUD one is now an actual lender's disclosure document. It is also a truth in lending disclosure. There are some significant implications to that document now becoming, in many ways, much more of a compliance document than it is currently. So it uses a new numbering scheme. There's no more HUD lines, no more 500 sections or 1,100 sections. It's like Battleship now. It's G4 and K11. There's still a buyer and a seller side, and we'll look at the document a little bit closer. But probably the most significant issue is the one that I'm going to talk to you about right now. And if you don't remember anything else from this presentation, think about what I'm going to say next.
Noah, can I interrupt with a question?
Yes.
All right. With item 3, how will this affect investors' title requirements for HUDs to match short sale approval letters and all docs matching, if at all?
That's a really great question, and it is going to affect. It's going to affect all of the above, I guess, is the short answer. Title requirements for HUDs to match, short sale approvals. I don't know that it's going to change significantly from how things are now. Everything will still need to match. I think that when we talk about item 3 here, as it relates to the fact that the document has to be delivered 3 days prior to closing, that's where the matching, I think, is really going to become an issue. And so when you talk about short sales, the implications for short sales are that if you run over due to the 3 days, that is going to be an issue. And so let's talk about that a little bit more. On number 3, the new HUD statement, the new closing disclosure form, has to now be delivered 3 days prior to consummation. And consummation is interpreted as closing, or in some cases, I suppose you could interpret that as signing of the documents. And the important takeaway point there is that it's the intent of the Bureau currently to give consumers 3 business days with that document before they can close their transaction. And I'm going to try and head off a question that is always asked, and the question is, can they waive the 3-day requirement? And the current answer is no, you cannot waive the 3-day requirement. However, there are some discussions and proposals around waiving it, but if you think about why it would be allowed to be waived, it kind of defeats the purpose of the 3 days. So there's not great anticipation, I guess I would say, that that's going to be waived. When you talk about then the implications of matching, let's think about that a little bit and imagine the future where loan documents arrive on a short sale at Monday at 4:30 in the afternoon, and you really need that new HUD statement to go out because your borrower needs to sit with that HUD statement, your buyer, for 3 business days prior to being able to close. So the implications are, if you have a short sale approval that expires on a Friday and you don't get documents out that Monday, regardless of when they arrived, you aren't closing that transaction that week. Your best case scenario closing date is now the following Monday. That's pretty significant. What are the implications for your business process? What are the implications for short sale approvals? What are the implications for loan lock extensions? And so recall when I mentioned earlier that issue of your buyer arriving without having seen a copy of the HUD statement, well, we fixed that. And we fixed you not having a chance to review it. But we've created some other issues, and I shouldn't say we because I'm not the CFPB. Other issues have been created in the fixing of that. So think about that a little bit. More questions may arise on that, but that's a very, very significant implication. Now, it does not eliminate the right of rescission on a refinance transaction. And you may wonder why I'm telling you that. Well, think of what it does to the business process on the settlement services side and your lender as well. If refinance transactions are now 6 business day lead times and residential transactions, real estate transactions are 3 business day lead times, there are real significant implications to the business processes of both the settlement services industry and your lender as well. And then if you further think about that issue, what happens if you have to redisclose? Item number 4. And we've all had the scenario where you get to closing and something's wrong and a rate is wrong or a fee is incorrect and something has to be added or changed to meet the consumer's expectation. Maybe you do a partial redraw, maybe you do a quick re-sign the next morning. Well, the current proposal says that with changes greater than $100, the consumer has to receive a new set of disclosures and 3 new business days have to elapse before they can sign and close their transaction. So think about the implications of a closing delay now. A closing, one redraw, one partial redraw, now is a 6 business day delay in the closing process. That has some pretty significant implications on your business processes and how you set expectations, write transactions. The implications are broad. Think about the implications of 2 or 3 redraws, and we have all experienced those really awful scenarios. We are now talking about 3, 6, 9, 12-day business delays. And how does a lender decide how long to lock? No more 3-day lock extensions. Well, what does that do to the cost of lock extensions to the lender? Yeah, clearly, it will drive those up if you need 6 or 9 or 12 business day lock extensions. I'll pause just to say that when we talk about business days, and this is different, I know, from the real estate side, business days from the financial perspective include Saturdays. So one elapsed business day will count for Saturdays. Holidays don't count, and Sundays also don't count. So very, very significant implications for the end of the process. So marinate on that for a little bit and think about what those implications might be for your business. Number 5 is another very interesting kind of undecided rule at the moment. And there are, if you thinking back again to the idea that your closing disclosure is now also a final truth in lending disclosure, who is going to be responsible for the delivery of that document? And either way you kind of split this out,